Hello, I'm Tim Beggins, president of Elk Trading Company. In today's article, natural gas and LNG, this week's main drivers and the look ahead. In today's article, we've got an image from marine traffic and a photographer, Gianluca Belloni, who is showing here the HLC Eagle LNG tanker. This is the tanker that will be picking up the first cargo from Golden Pass LNG on April the 20th. Natural gas markets softened this week as bearish near-term fundamentals outweighed lingering geopolitical risk. Still, volatility remains just below the surface. This week's main drivers, the storage build, plus 50 BCF. A larger than expected injection reinforced the view that supply remains comfortable heading into shoulder season. Mild spring temperatures, weak heating demand, and delayed cooling load reduce call on gas across key regions. And Freeport and Cheniere variability. Intermittent LNG feed gas flows added some noise, but overall export demand held steady. Golden Pass LNG progress. Commissioning activity continues, signaling incremental demand ahead, but not yet fully reflected in flows. The Iran conflict and ceasefire. Escalation initially lifted global LNG risk premiums before a ceasefire cooled immediate supply fears. And global LNG stability. European storage remains healthy, keeping TTF anchored and limiting upside spillover to U.S. prices. The look ahead. Golden Pass LNG ramp up. Train 1 is expected to increase feed gas demand, tightening balances more than current levels. The shift to summer cooling. Early forecasts suggest above normal heat, which could accelerate power burn demand. And hurricane risk. With the Gulf Coast exposed, any early storm threats could inject volatility into both production and LNG exports. Developing El Nino. Potential for hotter U.S. summer conditions may increase cooling demand and tighten supply-demand balances. The storage trajectory. The pace of injections over the next 4 to 6 weeks will be critical in shaping end of summer inventory expectations. And LNG demand growth. Asia's restocking and Europe's ongoing diversification efforts continue to underpin global demand. The bottom line, the market is transitioning from loose shoulder season fundamentals toward a more weather and export-driven setup. Near-term softness may persist, but the path into summer suggests rising optionality and volatility. Let us know your thoughts in the comments section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.